something someday. You're going to buy a car someday. You're going to buy land someday. You're going to buy a house someday. You're going to buy, other things. We all know
second home, vacation.
a second home, a third home, but a ranch.
Yeah.
We are all going to spend money in the future. The key to that is buying that bucket of money today. Because as you pay for, and that's using life insurance. And the life insurance is structured in a way correctly, you can access that death benefit.
Okay, so you're talking about almost like a source of capital for other things.
I'm working with a client right now that puts, 6 figures a year into his policy. When he goes to buy something, he borrows it from himself off his death benefit.
What the heck?
And he
so
never
you're not
borrows
using
money.
Real estate or anything. You're using your life insurance.
I use my life insurance death benefit to leverage all major purchases that I purchase.
This is insane.
And we
dude.
teach that by structuring it in a way to where you are buying that bucket of money today, and based on as long as you don't mech it, which gets confusing, which means as long as you don't overfund it to where it becomes a taxable event, you're able to pull off for the death benefit and use for anything in the future based on how much you put in and how long you've had it. So I have one client.
What happens if you just won't get it when you die? I guess is that
unless I put it back. So
okay,
I'm borrowing from
back,
myself.
Right?
I'm borrowing from future money, paying myself the interest, and taking that rather than by doing it through a bank.
But if you're buying a house or something, it's an investment anyway. You're buying an investment with the life insurance.
You're
Dude,
doing
this
it
is
now.
Beautiful. This is amazing.
That's
I love hearing this. I didn't know this existed. And so I had started hearing some tricklings of it and stuff, and I was like, what the heck are they talking about kind of thing. This is amazing.
So there's a couple of books, like What Would the Rockefellers Do?
Yeah.
What do billionaires do? If you start educating yourself on it, you'll notice, and there's people that I've talked to that have flat out told me, you wouldn't believe this, and I know they're wealthy. Whole life insurance, dividend paying whole life insurance is a key component of my portfolio. He said, everybody hates it. I love it. And when you dig into it, it survived the Great Depression. It survived all the calamities that we've had. It's just a tool, but it's been around the longest. It's the longest investment tool that we've ever had in this country. I mean, life insurance companies don't go down easily. I mean, few and far between. Banks do. But life insurance companies don't.
So they get bailouts. So
if you can't beat them, join them, right? So use what they're offering you to your advantage. And there's a lot of ways to do it.
And what are the two things that are certain in life, too? Right?
Death and taxes, dude.
So that being said, to piggyback on that, because that's a great statement when you're thinking about long term, it's also a guarantee is that you're going to spend money in the future.
Right. Exactly.
So purchase your wealth today. Structure it the right way, and this is where you don't have to. I'm saying this for a reason. Make sure it's structured correctly. Yeah. You're not just buying a life insurance that if you die it gets paid out. You have to structure this in a way. You're not buying term insurance. You're buying a specific type of insurance, structuring it for cash and accumulation while you're still alive, using it for investment purposes, and you make sure it's structured that way from day one. I mean, I 10 years into mine, I've pulled out $60,000 for a couple of years just to chill and do other things. And I pulled it out of my income off of my death benefit, and then I put it back over the next 3 or 4 years. And we even have big corporations that'll say, "Hey, this is really cool. A business owner can use what's called the 162 bonus plan as part of the IRS tax code that says they can write off up to 20% of their revenue if they put it into a key employee retirement plan using IUL." So I have one client that's putting $1 million a year into his IUL, and he's going to pull out like $14 million when he retires. Tax free.
Dude, Toasty Creations LLC is about to be on that. I'm just saying.
I think I'm about to work for you, this guy.
Dude, let's get that LLC going. Let's make this happen.
Think about it. Any of these other investment vehicles, CDs, stocks, bonds, mutual funds, 401ks, it's going to get cut in half. When you do the numbers with taxes and everything, it's getting cut in half.
I mean, I do my own investments now, but like this.
When we say tax-free, we mean you keep 100% of the money you've earned.
Death benefit cannot be taxed. You're pulling from the death benefit.
Neither can a loan on your own policy. They can't tax a loan because the loan's going to be paid back.
Off of the death benefit. So it's not even interest that you would have paid.
It's a beautiful thing.
Dude, and then you're telling me you don't even have to pay it back. Well, that's what you said anyway. I don't know if it's...
You don't have to pay it back.
This is hilarious.
Because you're borrowing from your future, so you'd want to put it back. But let's say hardship happened. Something happened where you weren't capable of doing it. You can then put that policy into some sort of structured plan to where you're only putting a small amount in until you're back on your feet. And then you work your way back up to setting that up again for yourself.
But you're not required to make a systematic payments, and if you miss a payment, it's going to ding your credit. You don't need credit to pull money that you own. Dude,
this is crazy, man.
You're taking control of your money from all these institutions and government programs, and you're the boss. And it's been around
Yeah.
Well over 100 years.
Apparently, it's existed, right? But like,
Yeah.
maybe they're not really gonna shout it from the rooftops. Like, I don't hear CEOs and stuff talking about this stuff or
What's
millionaires
the
talking
risk?
about this stuff.
What's the
right?
risk of government crackdown on this?